Hey everyone, so I've been diving deep into Warren Buffett's recent moves, and what I found is honestly fascinating and not quite what the headlines make it seem. Here's the reality: while markets have been experiencing serious turbulence throughout 2024 and into 2025, Buffett actually sold over $134 billion worth of stocks last year. Yeah, you heard that right. He's been trimming positions left and right, building up a record cash pile that hit $334 billion by year's end. But here's where it gets interesting: he's not completely sitting on the sidelines. Let me tell you about the 3 stocks Buffett has been quietly buying, and why they matter. Stock 1, Occidental Petroleum. This is Buffett's big play, and I think it tells us everything about his strategy right now. In late December 2024, Berkshire Hathaway bought 8.9 million more shares worth about $409 million. Now, Buffett's been building this position since 2019, and his stake currently sits at around 28% of the company. Here's what caught my attention: Occidental has a prime position in the Permian Basin, which is literally the cheapest source of oil and natural gas in the United States. Their third quarter results beat expectations, and management is projecting $300 to $400 million in annual cost savings starting in the third quarter of 2025. That's real money. But get this, Buffett even mentioned in his recent shareholder letter that Occidental is one of the handful of stocks he plans to hold indefinitely. When the Oracle of Omaha says that, I listen. The stock is trading at just 15.4 times forward earnings, with a consensus price target suggesting over 36% upside potential. Stock 2, SiriusXM. Now this one surprised me. Buffett, or more likely his investment manager Ted Weschler, has been aggressively buying SiriusXM. In late December, they added 5 million shares worth about $107 million, bringing their total stake to around $2.7 billion. Here's the thing: SiriusXM got absolutely hammered last year, with shares plunging 58%. That kind of drop can be terrifying, but it also creates opportunity. The stock is now trading at a forward earnings multiple of just 6.4. That's dirt cheap. Now, I'll be honest, the company disappointed investors with its 2025 outlook in December. But Buffett's known for buying when others are fearful. The valuation is so attractive that even modest improvements could lead to significant gains. Stock 3, Virisign. This is the smaller but strategic play. Berkshire bought about 474,000 shares worth $94 million in late December and early January. Virisign is fascinating because they control something incredibly valuable: the registry rights for .com and .net domains. They just renewed their .com contract through 2030, which gives them a monopoly-like position in one of the internet's most fundamental infrastructure pieces. What I found interesting is that Buffett first bought Virisign back in 2012, added shares through 2014, then didn't touch it for a decade. Now he's back. The stock's been trading sideways, which means the market isn't recognizing its value, but Buffett is. Now, here's what really matters: Buffett's not telling us to panic. His massive selling spree isn't a doomsday warning about an imminent crash. What I discovered is much more nuanced. Look at the pattern. Every stock he's buying is relatively small, mid-cap or smaller companies. SiriusXM has a market cap of just $7.5 billion. Virisign is around $20 billion. Even Occidental is only $47 billion. Meanwhile, he sold over 600 million shares of Apple in 2024, which was absolutely soaring. He also drastically cut Bank of America and Capital One. What's happening? The S&P 500 is trading at 21.8 times forward earnings, one of the highest valuations since the dot-com bubble. Large-cap stocks are expensive. But mid-cap and small-cap stocks? They're trading at forward PUS of 15.6 and 15.3 respectively. Buffett's message is clear: be more selective. The value isn't in the megacaps everyone's chasing. It's in these overlooked, smaller companies with solid fundamentals. So here's my take: Buffett's moves reveal a two-part strategy. First, when you can't find good value, hold cash. He's sitting on $334 billion in treasury bills, earning solid returns while waiting. Second, when you do find value, act decisively, hence the strategic purchases in these 3 companies. The legendary investor isn't predicting a crash, but he's definitely preparing for one. As he wrote in his shareholder letter, when downpours of that sort occur, it's imperative that we rush outdoors carrying wash tubs, not teaspoons. Now, there's an important caveat: Buffett's playing a different game than us. He can't easily buy small-cap stocks because he'd move the market. But individual investors? We have that flexibility. His preference for smaller companies right now is actually a roadmap for where the real opportunities might be. Remember what he said back in 2014, most investors would be better off putting their money in low-cost S&P 500 index funds instead of picking individual stocks. But if you do pick stocks, make sure they pass the Buffett test. Can you estimate their earnings 10 years from now? If not, move on. So there you have it. While headlines scream about Buffett predicting a crash, the reality is more instructive. He's simply being disciplined, patient, and opportunistic. He's not timing the market, he's respecting valuations and only buying when he sees genuine value. The question isn't whether a crash is coming, it's whether you're prepared like Buffett is, with cash ready and a clear understanding of what represents real value in this market.